Paper trading update for Valentine's Day, Tuesday, February 14th, 2023. It has been maybe several weeks since I updated this. My apologies. Got to get better at that, don't I? Well, let's just get right into it and forget about all the BS excuses. I got a naked call option open here on crude oil. I sold it for 23 cents times 1,000, so it brought in $230. And I have a limit order to close that at 10. So depending on what happens, I might drop this limit order down to maybe 8 cents or so, but leaving it here for the time being, and that would make me net me about $130 on this, with using up about 2,500 of my buying power. The way that this works is there's more nuances to selling options on futures contracts than there is selling options on stocks. So something that unless I'm like if you think about, you have to crawl first, then you have to walk, then you run. This is kind of like running some sort of track at a high performance level. Maybe it's the Olympics, maybe it's just high college level. I'm not really sure, but it's definitely more advanced than this stuff. Speaking of this stuff, I opened a straddle on Disney. I opened that up. You can see right here. Right, click the date. I opened that up on the 8th of this month, the day before Disney announced earnings. Actually, maybe it was the trade. Maybe Disney announced earnings on the 8th after trading hours, and we see that here's the 8th right there. You can verify it. Look up right there. Look at that. When I hover over here, take a look. Right, the 8th. So I opened it up on that candle. The next day, Disney gapped up and then sold off to here. Now I had set up a limit order to close out this position, the long 112 call, long 111 put. I had set up a limit order to close it out at a 10% profit, but it didn't close. So this morning I closed out this put, which was in the money. I think I made about $30 on it or so. Can't quite remember. And then this one is just overall a loser. There's 3 days till expiration, right? It was like a 10-day till expiration contract, and I'm almost lost my full investment. I paid $355 for it, and I'm at 110. So I just decided to turn this into a debit spread and bring in a little bit of money. Brought in $31 that just to help cover this loss. And I guess I just could have closed it out, and but I just decided to do this for, I have no idea why, just to see what would happen. And so these are going to expire in a couple days, and I'm taking a loss on that one. This one, and this one are from a while back. Originally opened these, I think, when was it? November 23rd. Now those that I pointed out were selling options using the VIX. The VIX was at a certain point, so I sold some call options. If you want to watch that beginning video at the 5-minute mark, it's easy to remember, 5 minutes, right? In 30 seconds, it's going to be popping up right here. It's going to be a link to part 2 of that video, and part 2 of that video links to part 1. My apologies for that inconsistency, but that's just the way that it is, ladies and gentlemen, and whatever pronouns are required. So that's coming up in 10 seconds. And You can watch those. Now, with hindsight, I would have closed those out. There was a time when they were basically all profitable. Here it comes. Boom! Right there. The 5 minute mark. With hindsight, there was a time when I could have closed out this SPX credit spread for like $2,600. With hindsight, I would have done that. But this is my first time doing those selling options with the VIX, so I just decided to go with it. And now what am I learning? Most of these trades are just underwater when I could have closed out for a pretty big profit for most of them. Now this one, gold, we got I guess technically it's not gold, it's a gold ETF, but look at that. One of them closed out already. I had sold a strangle, which was shorted a call and shorted a put, and one of those, the put side closed out already, and I got this set to close at 115, and it's currently at 3 something. But our expiration date is not until January 2025, so we got some time for that to wear down, and that's taking about $2,000 of buying power. Healy, I'm short a $135 call that expires in 3 days. And this one right now is underwater by 210. So let's take a look at Helen of Troy Corporation. Healy, not to be confused with the gas stations here in Hawaii. Maybe got those Healy stations other places too. We're looking at a 6-month, 1-day chart. And the highest it's been was back here. Look up here. The highest it's been was on February 2nd. It got up to 125. My strike price is up here. Currently, stock is trading down here. I think that in the next 3 days, right, it expires the 17th. Right, so it's going to be expiring this Friday. I think in the next 3 days that your good buddy Helen of Troy Corp Com, I think it's going to be staying below 135. So I'm risking it. I'm staying naked for this position. Let's take a look at the weekly chart, 3 years weekly. See if we can gain any other information here. It's the 140, so we're between there, and monthly, anything, not really, other than let me look back at the weekly, go back further, right here at that 140. Where's this at? 120, and let's see in here, yeah, maybe with hindsight, maybe I would have picked a 140. But what is it? We're good. Well, I don't 100% know if we're good, but this cone of probability, which is set up at a 68%. Somehow or another, that 68 is for 68%. It in 3 days. Look down here at the date. Gonna expire at the 27th. Where's the 135? Boom, right? So I think I'm thinking we're pretty safe. 135 is going to be over this 200-day moving average, and right now we're having a hard time just getting over this 9-day moving average, under the 9-day, battling the 20-day, kind of stuck between this 100-day moving average, and we got. Which one is this? Is this 100-day? What moving average is this? Ooh, come on. There you go. Dun, dun, dun. I think that's the 100-day. Which color? Nope. All right, here's the 100-day. Yellow is the 20. What's the 9? 9 was right. 20, maybe it's the 50. Yeah, 50 day. Okie dokie. So we got the 50 day right here. Here's our 100. Above the 100. Anyways, I think you get the picture. It's 5 days. So yeah, so I'm just letting that one run. I'm going to let that run. I think it's going to expire worthless. And it's taking a good grip of 1,300 buying power to make a measly 30 bucks. These, we already talked about those. Still got this random one share short of S&P 500. And no long stock, no open orders. But let's open an order. Now, all that stuff that I just got done talking about, that's fine, that's dandy. I like doing that stuff. But you know what I like doing the most? I like doing this. I like selling cash secured put options. By the way, there's a link to this website in the description below. And you can get some downloads. I'm changing this website up, so feel free to grab that stuff. But overall, if you got an internet connection, you got a bank account, you spend money at least once a year, you really have no legitimate reason not to be selling cash secured put options on a stock you'd be happy to own, right? And read more of that stuff. But all this stuff over here, right? Everything that we just got done looking at, there are pros and cons. Like, for example, this Netflix one, right? I brought in $2,600 here, right? But there's a risk of, upon expiration, of losing money, right? Right now, even though I brought this cash in, right now I couldn't close it for a profit. I would have to pay over the amount that I brought in. But what I like doing this stuff, and particularly I'm a big fan of selling options in the futures account. You know, me personally, I don't drink alcohol. I don't do stuff like that. So what I do for some intensity, I sell some naked call options and naked put options on crude oil futures because, woo, that is a rush. You think Vegas is exciting, but you probably shouldn't be doing this unless you have some experience under your belt. And what should you be doing? Let's take a look at this. Let's take a look at something like Cal-Maine Foods. Right, we got two different ways of looking at it here. We got the Yahoo Finance screener, or Yahoo Finance, which is free, and you got this Finbox, which I pay for. I like Finbox more, but right now the only thing that Finbox doesn't have that I can quickly get here at Yahoo Finance is percentage held by insiders. So you see, Cal-Maine, it's got about 10% held by insiders. Let's randomly look at a different stock. Let's look at we'll look at a couple random ones. All right, we'll take a look at Apple. Most people are familiar with Apple. Held by insiders. Whoa, look at that. Not even 1%. What's another one that a lot of people are familiar with? How about Ford Motor Company? Now, who are insiders? Insiders are people that are running the company. Now, if people that are running the company are willing to invest their own money into the company, well, that tells you something, right? Look at this, Ford, not even 1%, 14%. Let's look at one more. This one I really don't know, but let's take a look at another car company, Tesla, which a lot of people know. How much do the insiders own? All right, there you go. That's a little better, right? 16%. Right, so you can see that tells you something. Now you can watch this number. If this number starts decreasing, that's telling you something too. If it's increasing, that's telling you something also. And if it's staying the same, that's also giving you some information. Let's go back to Cal-Maine Food, right? Because eggs were in the news not too long ago. I don't know if people are still talking about eggs, but I just ate 4 eggs not too long ago, earlier today, maybe about an hour and a half ago or so. Okay, so held by insiders, right? A little less than 11%. That's pretty good. Held by institutions, mainly held by institutions. We see that does it pay out a dividend? It definitely does. It's going to be paying out. Looks like it's paying out about $3.08. 308. Are you a 308 fan? I'm a 308 fan. I'm a 556 fan, but I'm also a 308 fan. So anyways, and you're looking at about a little less than 6% dividend with a payout ratio of 17.8%, which means when the money comes in, about 17% of that money is used to pay out this dividend. Now, that's a pretty low amount, right? So theoretically, Cal-Maine should be able to keep up this dividend, right? That's not bad. That's a pretty good dividend, right? Insiders owning it. Let's take a look over here. So Finbox rates this in its health as excelente, right? Excellent. That's pretty good. Current share price is 54.96, and these averages, these different targets, and all the stuff that it's using these 4 models right here to come up with this average number right here, right? These models. Click down. The lowest one here is 33. 33. Most of them are kind of up there, but all these average out to about 65. So down here in the dividends, 34. Let's in a couple minutes, after we look a little bit at some more fundamentals, we're going to take a look at selling a cash secured put option on Cal-Maine, because I wanna be in the egg game. I'm an egg man. So I want to be in the egg game, and maybe at 35 bucks. Let's see if we can get what we can get paid at 35 bucks. So look down here real quick. Free cash flow. Ooh, that is not the best, right? Why is it in the negative? Why is it in the negative back down here? Okay, we're positive now. Positive free cash flow. What's free cash flow? That's how much money's left over after all the bills are paid, basically. What else could we take a look at real quick? Let's take a look over here at EV to EBITDA. All right, looking good, right? 3.4, below 10. All right, below 10 is pretty good. All right, so it's potentially a pretty good buy. What else might we take a look at? How about the PEG ratio? PEG ratio right at 0, huh? Okay, I can deal with that. What else could we take a look at? Okay, how about, let's take a look at debt to common equity. Ooh, look at that. Huh. They got a 0 on that. That's pretty good. And let's do debt to total capital. Maybe they don't have any debt. Let's take another look. Total debt. No wonder, huh? Look at that. No debt. That's pretty darn good, right? As opposed to, let's just hit up, let's say something like, let's go back to Ford. How much debt does Ford have? Holy macaroni, right? That's a grip of debt, right? 140.5 billion. That is a grip of debt for Ford Motor Company. So what's this debt to common equity look like? Woo, doggies! Look at that, 324. Man, that is. Man, would you like to have your debt to total equity be out of whack like that? You'd probably be insolvent, be bankrupt. Look at this, debt to total capital, right? If 100% of their capital. 73, you could say 73% of that is, I guess, allocated to debt. When you got Cal-Maine over here, keeping calm, right? Cal-Maine keeping calm with no debt on the books, right? So that's why I guess they got an excellente. So this company's probably be around for a while. Let's take a quick look at earnings. See if we can find those earnings. Any earnings? Maybe we have to find it. So we'll look at the PE ratio real quick. Okay, under 10. That's looking good. Now there's other things you can look at, but I want to take a look at the earnings. So let's go back over here. take a look at these financials and income statement, operating. Let's just look at operating income. All right, here is the most recent one. Operating income, kind of fluctuating here, and for the most part, hey, we had something negative here, 2017, and then 2021, the old health pandemic came in there, guess put some negativity into the eggs, but overall, all right, it's no debt. So, anyways, your good buddy Brent, I don't mind owning this company. I'm okay with owning this company. Let's double check something here. Enterprise value. Okay, so right, this is what I like. I like this, and why do I like this? Because now I'm going to look at selling a. And before we sell on it, let's look at the chart. That's what we're going to look at doing. Right, so we're looking at a 6-month chart, 1 day. Let's bring this out to, let's add an extra 6 months on here. Take a look for 1 year. So 1 year ago, we're down here at 40 bucks. All right, so we see the year 65 to 40. I was thinking about trying to get it at 35. That might be a far cry. You see this? Looks like 52 is really got some resistance or some support set up right in there at 52. And actually, I wanted to look at this. Let's look at the Ben Graham number, right? Ben Graham formula value. Woo! Look at this. All right, the way that Ben Graham, Warren Buffett's mentor, this old school way of calculating it. But for right now, the past 12 months, valuating for about $107 share price. Now, does that mean it's going to hit 107? Probably not. But we got over here, we got 4 analysts targeting 55. We got these different models with an average of 65. And so let's see what we could potentially do. Take a look at this weekly chart for 3 years. Looks like 45 might be I don't mind getting a sign. At 35 bucks, right? Probably can't get anything there. 45 right here. What if we go out a little bit longer? What if we were to sell for 3 months? The 40. Let's just put it in. Let's see if 3 months. Looks like it going to be hard pressed, but we'll give it a try anyways, right? Let's see what happens tomorrow. We'll put that in. So what are we basically doing? We're selling one cash secured put option. We want to play insurance policy person. We want to insure 100 shares of Cal-Maine at 35. If it goes below 35 or at any time during the next about 90 days, we will buy 100 shares at 35 bucks. And we're looking to get paid about $240 to do that. It's going to tie up 352 bucks roughly. Put this under open orders, and I think there's a low chance of this getting filled, but we're gonna do it anyways because that's what I like. So there it is. Now it's put in there. And why this is so great is because of this. There's basically 2 things that can happen at option expiration date. Right, basically 2 things. One is you make money. Now, I know you could break even, possibly. I'm putting breaking even over here because this one's real bad. 2, you lose money. Right? That's your worst case scenario. Right? You break even, that's good. You didn't lose any money. So we'll put this over here. That's generally the 2 things that could happen. Right? And with all these other trades that we've got right in here, all these trades and that futures trade, all those option trades end up being one of these 2 sides, make money or lose money. Right? And what is this thing in the middle? This is your financial statement. This is your income column. This is your expense column. This is your asset column. This is your liability column. So what would income column? You know what income is, right? You work a job, you make some money, it flows into this column. Expense column. This is where money flows out. Now let's say, like personally, I have a cell phone. I have a month-to-month contract with it, right? So every month money flows out of here. Now if you have a cell phone and let's say you don't have a month-to-month service, let's say you have some sort of like 1-year contract with your cell phone. Well, that 1-year contract is going to show up here in your liability column. And it would be whatever, 1 year, what's the total amount of that? Let's say it's $1,000 or whatever. Well, let's say it's 10 months just to make it easy, right? Make the math easy. So every month, $100 is going to go up here. And it's going to flow out of your financial statement. So liabilities, right? You owe this money, it's flowing out this way. And now your asset column, depending on who it is you talk to, but we're going to use assets being things that put money into your pocket, or I guess like some people would call a car an asset, but I view a car as a liability myself. I get it, you could sell it, but it's like not only might you have a loan against it, which would definitely show up in your liability column, but every month you got some maintenance to it. So money is just flowing out, right? You got to pay gas into it. You gotta do whatever. So for the most part, cars for me are going to be in the liability column here. But assets, what could you have? What sort of asset could you have that doesn't pay you any money, right? Potentially share of stock. If it doesn't pay a dividend, like that's in your asset column. Also precious metals could be over there. So anyways, it's stuff like that, right? So you got an idea, right? Income, expenses, assets, liabilities, right? So now when you're selling cash secured put options on a stock that you don't mind owning, and if you were to in the description of this video below, if you were to go to Eye of Success and you were to watch this playlist right here, and you were to download this stuff right there, you'd follow a formula where you'd have a different outcome over here, right? This is your normal. That's the normal outcome. Well, let me show you now that you got a better idea of what kind of ran out of room there, right? Asset. All right, so let me show you now when you're selling cash secured put options on stocks you don't mind owning. Now, one downside of this is you're reducing your ROI, right? You're taking in less money for greater probability of success. So you got one outcome right here is that your option expires worthless. So the premium that you took in because you sold flows into your income column, right? And how many ever times that happens flows into your income column. Now let's say let's say on CalMain. Actually, in this paper trading account, I have sold a cash secured put option on CalMain before. So this would be the second one. And let's say we get filled. Doesn't matter for how much. All right. Now the second one. Now let's say the third one. Let's say these first two expire worthless. The first one expired worthless. Let's say this next one get filled at 35. That expires worthless. Now let's say the third one though does not expire worthless. Now normally, right, when we looked at these other trades, I don't know if you can see that, when we looked at these other trades over here, right, these either make money or lose money. Now we got something different going on, right? We got make money. We don't have any losing money going on. Because now let's say the contract does not expire worthless, which means let's say CalMain on our third time, let's say we have the obligation to buy 100 shares at 35, and now let's say CalMain is at 30. All right, so it's below our strike price. If you're kind of below your strike price, or in that situation with these trades over here, you lose money. Over here, we still keep the premium. The premium still flows into our income column. And now we have 100 shares of CalMain. Go right here. Right? 100 shares of calm. And we're feeling calm because we're in the egg game. And our egg's going to make us some money. How much was it? $3.08 per share. Now we got 100. So over the course of a year, we have $308. I get it. It's gross. It's before taxes, that type of stuff. We got $308 also flowing into our income column. Hey, where's the expenses? There aren't, right? Wow, isn't that amazing? It expires worthless, you win. It doesn't expire worthless, you still win. Potentially win even bigger. So that is why this website and myself, that I believe in 2023, if you have an internet connection, a bank account, and you spend money at least once a year, you got no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. One of the greatest things about the strategy is you can cash flow the stock market to achieve financial freedom without spending a lot of time in front of a screen, so that you can be doing the things you love instead while working to achieve your financial goals. So keep paying attention to watch those other paper trading playlists if you want. But this is in my opinion, if you're going to learn one strategy, this is the one strategy to learn. So I put this playlist together. There's 5 videos in this playlist, and 5 different videos. With this last one, we'll show you how to use the Yahoo Finance Screener tool to start screening for stocks that fit your budget, and looking at things like the enterprise value to EBITDA ratio and some other things like that. This one, I think, is just basically talking about why. This one gives you a blueprint of doing the wheel strategy, so watch that so you know what that is. And then this one, setting up, I think this one will have you setting up some charts, talking about selling put options. This one, setting up some charts, more on the call option side. This is both, and this one might be both too. But anyways, you watch all 5 of those, get these downloads, then start paper trading. Boom, get your own paper trading account. If you guys have any questions for me, reach out to me. You can do it here on YouTube if you want, but even better, hit up your good buddy Brent right here. Boom, contact. All right, you guys have a great night. Aloha.